Are you afraid to get that call from your CPA? Tax season call, and he's going to tell you, do you owe taxes or are you getting a refund? The big mystery. Do you fear that call? So many people I know do. Not my clients, though. This is secret number 10 of my 12 expert CFO secrets. And the workbook has all 12 of them. And if you haven't downloaded the Profit Accelerator workbook, be sure to do so because you can follow along in these 12 videos. And there's some great information in both the workbook and the videos. So we're going to talk about tax saving strategy because it is important not to fear that call. So back in my other strategy, where I believe it was strategy number 6. In strategy number 6, we talked about the blueprint. And in the blueprint I create for my clients that I work with my clients, we have a line where we factor in taxes based on their profit. So they know ahead of time, and they actually have money set aside ahead of time for their taxes. So you can speak with your CPA and get some sort of a percentage of your profit that you should put away for taxes. And what you can do every single month is take a percentage of your net profit and put it away for taxes. If you don't want to make that call or your CPA is not helping you out at all, a general rule of thumb would be 30%. But again, it depends on your business structure. If you're an S Corp, it would be lower than 30%. If you're in a higher tax bracket, it'll be higher than 30%. But 30% is a good number if you're a sole member, sole proprietor, LLC, and of your profit. So the profit is your income minus your expenses every single month. If you take your income, subtract all the expenses, that's your net profit. And that's the number you can use to multiply it, whether it be 30% or some other percent, and say, okay, I'm going to take that number out of my bank account right now and stick it in a separate account to create a savings account for taxes. So when your CPA calls you up after he does your taxes, you have that money sitting in your savings account, and it's no big deal. You already know the maximum it could be, or you have a nice big. What happens more often than not, business owners will have a year or two, maybe their first year or two, where they're not profitable, which is normal. And then the third year, it's gangbusters, and they make all this money and they have all this profit. They're excited, and they're living this life of abundance now, and they forget about taxes because they never had to pay them before. And then their tax return comes around, and they've already spent all the money. They didn't think about saving for taxes because they never had to pay them before. Now, once you have to pay them, you're going to have estimated payments that are going to factor into them. And your estimated payments are not optional. Just so you know that. Estimated payments you must pay them, or you're going to get penalties. But the first year you see a profit in your business, you may not have made estimated payments, but you're going to owe the IRS some money. And then you're going to have to also pay your first estimated payment for the following year. So April comes around and it's not a fun time for you because you didn't really stay on top of your profits and putting money aside for taxes. So this is what I'm talking about, saving money for your taxes. being proactive, not being afraid of that call from your CPA, because you already know you've put that money aside months ago. And every single month you put money aside. So it's never a surprise, it's never a challenge. It's all, you always have it there and you haven't spent it already. So this is secret number 10 of the 12 secrets from an expert CFO. And if you don't have the workbook that goes with that, please make sure you download it. There's a link available for you, the Profit Accelerator Workbook. That's the 12 secrets that come with this. And you get them all in the workbook. You don't have to wait for the videos. But again, having both together is a great match. See you in video 11.